Looking forward to retirement? Let's talk about two big retirement topics, Social Security and Medicare. You've paid into Social Security and Medicare taxes pretty much your whole life, but you probably haven't given too many thoughts to the details. So in today's video, we're going to be talking about how Medicare and Social Security interact. Now, if you do have more questions about Medicare, I'm going to link a full playlist at the end of this video because remember, yes, we are licensed health insurance brokers. Specifically, we deal tremendously with Medicare. So if you have any questions regarding your Medicare coverage, you can reach us in the comments below or at the number on the screen. And of course, please make sure to like and subscribe to stay up to date. So one of the biggest questions surrounding Social Security is when to start collecting. So let's start there. The minimum age to collect Social Security benefits is 62. So if you are 62 and you need those Social Security benefits to help supplement your living expenses, then you can certainly begin collecting now. However, it may be in your best interest to put off collecting Social Security benefits until your benefits are a little bit higher. This is when people start talking about the FRA, or full retirement age. Now, the size of your Social Security benefits is dependent upon a series of factors, including how much you've earned over the year you were born, and the age when you started claiming. And that's even down to the month. You'll receive your full Social Security benefits if you start collecting when you've reached your FRA, or full retirement age. Now, it used to be that the FRA was 65. However, for those born after 1960, it has raised to 67. To find your FRA, let's take a look at this chart.
So if you were born in 1937 or earlier, your full retirement age is 65. If you were born in 1938, it's 65 and 2 months. 1939, 65 and 4 months. 1940, 65 and 6 months. 1941, 65 and 8 months. 1942, 65 and 10 months. 1943 through 1954, it's a flat 66. Then 1955, 66 and 2 months. 1956, 66 and 4 months. 1957, 66 and 6 months. 1958, 66 and 8 months. 1959, 66 and 10 months. And 1960 or later, that would be 67. Now, of course, as I said, you can start collecting as early as 62, or it could go up to 70. If you do decide to retire at age 62, then your benefits will be significantly reduced. And this chart will give you an overall idea, but there's actually a really great calculator on SSA.gov where you'll put in your specific information and it will give you a fixed number that is specific to your situation. But basically, this should give you an idea that if you were born between 1943 and 1954, your FRA is 66. Now, if you were to receive a $1,000 retirement benefit, it would be reduced by 25%, which brings you down to $750. If you were born in 1955 and you were to retire at 62, then your benefit, if it would ordinarily be $1,000, would be reduced down to $741, which is a 25.83% reduction. Now, why is it more? Well, that's because the full retirement age for those born between 1943 to 1954 is 66, and that means between 66 and 62, it's 48 months. However, if you were born in 1955, then you were to retire at age 62, then your full retirement age would be 66 and 2 months, which gives you a 50-month difference, hence the larger decrease. And that goes on, so on and so forth. You will see that it just continues to get larger and larger. Therefore, your benefits get smaller and smaller. And that is, of course, if you were to have a $1,000 benefit. But as I said, there is a more specific calculator on SSA.gov, which will actually give you your benefits, your actual amount based on your retirement age and your salary.
Now that you understand FRA, you need to understand how collecting at different ages affects the size of your benefits. Now remember, yes, you can start collecting Social Security benefits as young as 62. However, if you start collecting Social Security before you've reached your FRA, you will have decreased or lessened benefits. And those numbers will not increase once you hit your FRA. You're going to have smaller payouts for the rest of your life. And these numbers may become important when calculating your Medicare payment. We're going to discuss that later in the video. Now, on the flip side, if you wait until your FRA or beyond as you approach 70, those benefits will actually become larger. Now, this doesn't increase past the age of 70, so there's really no benefit to waiting past 70 to start collecting Social Security.
So this is a really helpful calculator on aarp.org. I would still recommend that you use the calculator from ssa.gov because you'll be able to do all of these things as well. Check your eligibility for benefits, get your estimate, also apply for the benefits at that time, and review your record of earning. It's just that you have to create an account to do that. So for the purposes of today's video, we're going to be using this handy calculator on aarp.org. So let's put in that we were born in 1950, and we'll say that our salary from the previous year was $80,000 single. Well, this will give you a brief rundown of what your estimated benefits would be based on that information. So if you did start claiming when you were 62, it would be $2,111. When you were 66, which would be your FRA, $2,814. Or if you waited until you were 70, then you would max it out at $3,714. You can also click here on all ages to see how it breaks down in case you're not going to start claiming at one of those key ages, so to speak.
We're going to start talking about how this affects your Medicare coverage, but just a reminder, yes, we are licensed health insurance brokers. So if you have questions about your Medicare or health insurance coverage, please feel free to reach us at the number on the screen or in the comments below. There is, of course, no charge for our services, but we are not financial advisors. Now, how does all of this affect Medicare? Let's break it down. Original Medicare is comprised of two parts. There is Medicare Part A and Medicare Part B. Medicare Part A is your hospital insurance, and Medicare Part B is your medical or outpatient insurance. Medicare Part A covers things like
inpatient care in a hospital, skilled nursing facility care, and nursing home care. Now, often people get these confused with long-term or custodial care, and that is not the case. Basically, skilled nursing facility care and nursing home care are for after you have been hospitalized and now you need to recover. So they will provide habilitative and rehabilitative services and services that require skilled nursing. Part A also covers hospice care and home health care.
And Medicare Part B covers things like
medically necessary services and preventative services. So this is basically anytime you see a doctor, it's Part B. So it's going to cover things like clinical research, ambulance services, durable medical equipment. Those would be things like wheelchairs, walkers, etc. They'll also cover mental health services and outpatient care and limited outpatient prescription drugs. So this would be insulin if it's administered via pump, vaccinations, chemotherapy, and certain oral anti-cancer drugs.
And there are actually two separate premiums. Now, most people don't really pay for Medicare Part A. If you or your spouse have worked at least 40 quarters, which breaks down to about 10 years, and paid into Medicare payroll taxes during those times, then you will be eligible for premium-free Part A, meaning you don't have to pay on a monthly basis to keep your Part A coverage active. Part B is what we really need to discuss, because Part B has a monthly premium, always, and it's actually determined by your income. So your Social Security benefits can actually impact how much you'll pay for Part B.
So as you can see, your Part B premium is determined by your yearly income, and Medicare is looking at your taxes from basically 2 years prior. So you can always file for an adjusted Medicare premium if you've retired and now you're making less than what your tax return would indicate. So basically, you would pay the base monthly premium if you're an individual and you make $103,000 or less, or if you are married and make $206,000 or less, and then it continues to go up from there. So in the next tax bracket, your premium would be $244.60. One more tax bracket up, it would be $349.40. Continuing to move up, $454.20, $559, or at the most, $594. So in all honesty, when you're comparing the differences in prices for the premiums versus your Social Security benefits, I mean, retiring at 62 versus 65 or even 70 is probably going to be a difference of thousands of dollars per year. And yes, that definitely could move you from one tax bracket to another, which would increase your Part B premium. However, it's not going to be such a significant increase that it would offset that increase in payments that you're receiving from Social Security. Because we're really, even from $174.70 to $244.60, We're really only talking about a difference of less than $1,000 per year, whereas you'd be making thousands of dollars more per year in your Social Security benefits. So this is definitely not the only thing that you want to take into consideration, and a financial advisor would advise you as such, but it is something that you should at least take into consideration when making that decision as to when to start claiming those Social Security benefits. And it's going to matter even less if you're in one of the higher tax brackets.
So we recommend that you work with a financial advisor to determine when it would be best for you to start collecting your Social Security benefits, because it really is determined on an individual basis. But when you do meet with your financial advisor, make sure you talk about those Medicare Part B premiums. Let us know in the comments below what you think is the best decision. Is it wiser to enroll? Let us know in the comments below what you think is the best decision. Is it a better idea to start collecting earlier when you're 62 and collect smaller benefits and maybe have a smaller Part B premium? Or is it wiser to wait until your full retirement age or even closer to 70 to take advantage of those larger payouts? Let us know your thoughts below. Thanks so much, and we'll see you next time. Bye-bye.
For those of you looking to learn more, here's that Medicare playlist I mentioned earlier in the video. And please make sure to like and subscribe. And if you have any questions, feel free to call us at the number on the screen. We'll see you next time.